Well, hello everyone there at Wall Street Silver. Happy to have Willem Middlekoop with us, and he is the founder of the Commodity Discovery Fund, which has been tremendously successful. Hopefully, you are continuing your incredible returns this year. Why don't we just get right into it? And Jim, I'm sure you have the first question to go.
Hey, Willem, thanks for coming back. We really appreciate it. So one of the things that's been a hot topic lately is digital currencies. And the central banks seem to be in a rush to really make this happen. I know you have a lot of thoughts on this. I would like for you to share it with our audience.
Yeah, there's quite a bit of misunderstanding around the cryptocurrencies, the central bank digital currencies, because after the huge run of cryptocurrencies in 2017, I think everybody in the financial world really woke up and realized they needed to change the system, because if you study the way we transfer money internationally, the system hasn't changed for decades, and it takes 3 to 5 days to wire money with high costs. And I think the success of Bitcoin and other crypto showed that, this is the 21st century, and you can do things smarter. And of course, there's huge competition. Now, so much money is going into the crypto space, especially into Bitcoin, and all these billionaires putting billions in Bitcoin. So the central banks really understood they needed to act. As you might know, I wrote The Big Reset in 2013, putting down the thesis that we need to transform this financial system to the next phase. And we need to find a new anchor for the dollar. We need debt restructurings, and so many changes are needed. And that's why central bankers decided that they have to build a new layer on top of the current fiat money system. So when central bankers talk digital currencies, they're not talking Bitcoin, they're not talking crypto. They talk about building the next level of fiat, but use some of the techniques which have been introduced from the crypto space, and actually make the system future-proof. And but I think the risk is that we build another layer of fiat money, so even more money might start to flee out of the current system towards Bitcoin and other crypto. So central bankers really are in a very difficult place how to move forward. And the commercial banks also see a great threat in these central bank digital currencies, because if we have central bank digital currencies, it will be possible for central banks to send money to private companies, individuals, and bypass the commercial banks. So this has huge repercussions, and that's why central banks are testing those digital currencies now. China is a few years ahead. The ECB is working on its own digital currency project. They will decide later this year whether it will be a full rollout. And of course, the US, the Federal Reserve, is working on a digital dollar. And they even have this new banking act in which digital wallets are being allowed. So one day we might be able to download from the App Store a Fiat wallet or ECB wallet. And well, that's a long answer to your short question.
I think the big fear I have with digital currencies from the central banks, from sovereign governments, is the tracking aspect. What if the government wants to get so deeply involved in our lives that they say, you can't buy this anymore? You can't buy silver coins anymore. You can't buy cigarettes anymore. What if they sort of, just unfavored businesses could just be banned by digital currencies no longer being accepted there? That's the big fear. And how do we avoid that?
When all money is digital and we work with digital wallets, and central banks provide the central bank digital currency directly to consumers, they can they can make sure that the money is only spent in a way they want the money to be spent. They even can say, hey, Jim, you'll pay an interest rate of -2%, and Lee, you pay an interest rate of -4%. Or Jim, you're allowed to spend this money only on food, and Lee, you're allowed to spend this money only on listed stocks instead of buying physical metal. And of course, there's this problem with anonymity, because when it's digital, it can be traced anywhere. So I've been involved with a few calls. We're involved with the OMVIF. The OMVIF is a monetary think tank in London in which the central banks meet the private sector. And I've been on a few calls in which these problems were being discussed. And they're thinking about maybe building a two-layered system in which the small payments up to, let's say, $50 will be anonymous. And the larger transactions will be traceable. And so there are a few important problems to be solved, and central bankers know about this. And well, of course, we as precious metals investors always question whether we can trust the bankers and trust the system. And of course, we're moving away to a less free society and more controls, and central bank digital currencies make it possible for central banks and for governments to control more of the financial space and the financial transactions. And they realize this, and they're struggling with this as well. So we need to see how this plays out. But from a reset point of view, and I think that's the most important point to focus on, when China, Europe, and the US all have their central bank digital currencies, and the rollout has been successful, it will be very easy for them to combine these central bank digital currencies, let's say within the IMF, and make one big IMF coin. It could be a digital SDR, or we could call it the Bancor or whatever, or the Fed coin. And then it gets very interesting, because then we reach a level on which we can have this monetary reset, and we can start using this IMF coin, digital coin, as the new world reserve currency. And this is what actually Mark Carney, who used to be the governor of the Bank of England, he's retired now, but he spoke exactly about this during his Jackson Hole speech in the summer of 2019. And this speech is still online. So if you Google Mark Carney, Jackson Hole speech, 2019, you'll find his full speech. And actually he is envisioning this. So with the knowledge we have now about everything which has happened in the last 2 years, reread his speech, and it's all there, the roadmap.
I did see that speech. Thank you. I'll look it up, and I'll add it into the link for the description of this video for others. One of the other issues from those of us who are precious metals investors, our big complaint about fiat currencies is the unlimited printing. And if we go to a digital, central bank, or European Central Bank or Federal Reserve digital currency, I really don't see them limiting themselves. They're still going to have the ability to create unlimited amounts of digital tokens or digital dollars, digital euros. Have we really solved anything at that point? Well, it's just another version of the same thing.
That's why I said it's just building a new layer on top of the current fiat money system. And actually, why one of the reasons they know they need to build this system is that the current financial system, only 3% of all money is being created by central banks, and 97% of fiat money is being created by commercial banks when they handle new loans or new mortgages. It's new money being created by commercial banks. But the commercial banks will be the guys who will be in trouble during the next crisis. look what happened after the Corona lockdown. So many businesses are failing now, or starting to fail, especially when the stimulus will need to end. And then there will be a wave of bankruptcies. And in these wave of bankruptcies, the commercial banks might have a huge problem. And as you might know, central banks can provide liquidity, but they can't provide solvency to commercial banks. The system is built in a way they can provide liquidity, but they can't provide solvency. The only thing they can do with failing banks is nationalize them or take a stake in them. That's the only way they can solve the balance sheet of commercial banks. So if you have central bank digital currencies, you have a way in which consumers and companies can deal directly with the central bank and avoid commercial banks. But of course, this is highly, this is a big risk for commercial banks. So commercial banks are really beginning to understand that these central bank digital currencies could be a real problem for them. But it could be a great way for central banks to take over the support for the financial system and give direct support to consumers and private companies. And you could have universal basic income this way.
Let's expand this discussion a little bit. You know, we've had now almost a decade of Bitcoin. Through that, people have really kind of come to understand fiat currency. The whole argument against it has kind of developed among the general population. So in that context, is it possible to have a central bank digital currency that isn't backed by anything?
Yeah, you're right. That the great thing about the success of crypto, even for us precious metals investors, is that there's a whole new generation, or actually the few generations, who now really understand hard money, fiat money. They start to study the history of money. So when I started to write about these topics, that was 20 years ago, you know, there were very, very few people interested in this area. And by having so many new generations getting better informed about what money is, there's a huge risk for central banks that more and more people will start to question the current financial system and also the central bank digital currencies. And especially now inflation starts to develop. And I think that this will be a huge topic for the next months and years ahead. Mm-hmm. And actually what you see now is the smart money, and even some of the younger generations are starting to flee out of current fiat money systems into crypto, into precious metals, into all government can't print, one could say. Look at what happens with real estate. Look what happens with stock markets. If all prices go up, stock exchange, real estate, crypto, precious metals, then actually you should conclude that the value of money is going down. And when we go to a next level and we really get a double-digit inflation, which we see in many commodity markets already, then we'll reach a point that central bankers know they will need to act, because if all people start to lose trust in the purchasing power of fiat money, we have a huge problem, because that's the point where hyperinflation might start to develop. We know that from history. And if you study history, and there's a huge appendix in the Big Reset about all failed fiat money systems in the past. Over 200 money systems have failed in the past. Actually, there hasn't been one fiat money system which survived longer than, let's say, 150 or 180 years. So all fiat money systems in the past have failed. So why would this fiat money system survive? And I think central bankers know this as well. And there's only one thing they can do to restore trust when more and more people start to lose trust. And that's to bring gold back into the system. And that's why one of the core theses from the big reset from my book is that one day we'll see a gold revaluation. Central bankers will bring gold back into the system.
If they in fact do that, I mean, I know we have great concerns about the privacy with central bank digital currency. Do you foresee people just kind of bypassing that whole system and making trades with precious metals for goods and services?
It's happening already. Look what's happening in the crypto space. Look what's happening with Tether. I think it's a huge scam, but Tether was developed because in the crypto space, the crypto brokers, they have huge problems in finding banks who allow them to do normal business. So what we've seen is in the crypto space, they have built this alternative financial system in which they no longer have to do transactions using the dollar or using the euro. They build their own stable coins. They build their own exchanges. And when more and more people will flee to this alternative system, of course, the central bankers will feel a lot of pressure to act. And of course, one of the risks for crypto investors is that one day governments might decide that the on and off ramps towards crypto will be blocked, or will be, there might be laws in which crypto investors are no longer allowed to exchange digital assets into fiat assets.
Can we expand into the technicals on Bitcoin? You know, we had this all-time high on April 14th, and since then it's pretty much been elevator down. I saw a head and shoulders top form. The neckline was broken. It looks like I'm projecting down to like 22K. I don't know how you see it right now. To tag along with that, we've also seen some negative stories come out with, you know, obviously Elon Musk and the energy usage of crypto. What's your view technically?
Oh, technically, I'm a huge follower of the stock to flow model of my Dutch friend, who's still anonymous. I know him, and actually, the current bull market, which started, well, good over a year ago, it looks very similar to the bull market which we saw in 2016, 2017. And another previous bull market, and you always have this mid-cycle drop, and Bitcoin always had these corrections of 35, 37, 33%, and this looks like just a similar drop, and everybody will be scared, and everybody will say, look, the party is over. But I think suddenly, and it might happen real soon, I think we're bottoming out now for Bitcoin. And I think Bitcoin is another beast than the other coins. And actually, I'm adding to my core position at this level, almost as we speak. And I expect Bitcoin to have a huge run towards 100K even this year, because there's so much money looking for a way to get out of the current financial system into safe haven bets like silver, like gold, but also like crypto. And Bitcoin is digital gold. I mentioned in 2014 in the Dutch edition of the Big Reset, I said Bitcoin is digital gold. I was stupid enough not to invest in it myself because I had these investments in gold and silver already. So I thought, why do I need digital gold when I have the real stuff? And that was a little stupid, but that's why I bought quite a bit of Bitcoin when it went down to 5,000-6,000 in the last cycle, and I'm very happy with those holdings now, and I'm not selling them. And I think you can expect another huge wave of money creation in the next few years, and gold will benefit, and silver benefits especially. But look what's happening now. All commodities go up, all stocks go up, all crypto go up, and of course you have corrections. That's normal, but it's not over. It's not over because Elon Musk doesn't like Bitcoin anymore.
I'm going to change the subject to the Silver Institute. The Silver Institute recently had a report that indicated that there are no supply problems. There's plenty of supply. Their argument is that it's just in the wrong form. Keith Neumeyer, the CEO of First Majestic, he called the Silver Institute's report total garbage. He says there's almost no recycling going on at the current prices. It's just not profitable to be done. And he has certain problems with other parts of their data. There was also the LBMA report in April that seemed to indicate that there's real concerns about supplies running out. They were reporting on what happened in February and March earlier this year, with the ETFs possibly buying all the supply that was available. I've heard you be interviewed saying it was in the range of 70 to 80%. Where do you come down on all of this? Is the silver market tight, or is it well supplied? Is the Silver Institute correct? Are they wrong?
I agree with Keith Neumeyer. I know him well. I followed him for years. He's been a mentor to me regarding the physical silver market. And I think he understands the silver market more than anybody else. And maybe Eric Sprott is somebody who's as well informed. And Eric Sprott also pointed out years ago that you can't trust the official numbers. And I had a discussion myself with the guys from the Silver Institute that their numbers don't add up, you know. Mm-hmm. And if people talk about all the above the ground silver stocks, they include all the ETF holdings. So these silver stocks are already bought by ETFs and large investors. And of course, tricks are being played, and it's very hard to understand what the real stress is in precious metals markets. And I always give one great example, which is palladium. You know, the same games were being played with palladium by selling paper, palladium paper, through the futures markets. And if you look at the open interest in palladium futures, it was as high relatively as in gold, silver, and platinum. And then a few years ago, the shorters weren't able to supply enough palladium for these low and manipulated prices. And then the paper shorts failed. And then palladium broke from the trading range and went up 4x. And if you look at the open interest now for palladium, it declined by 70–80%. So that's a clear roadmap which shows what can happen to silver, what can happen to platinum, which can happen to gold as well. And I think the next few years, or maybe even quarters, will be very, very interesting to watch all the developments, because things can get very, very stressful very, very soon, especially with the success you guys have worldwide now.
Can we talk about the equity markets now? You know, we've had this drawdown from the April highs. Do you think that we're in kind of a wave 4, or do you think that we're in a wave 2, 5 down?
I think we're in the last phase. Last phase of this bubble, so maybe it's the 5, and I wouldn't be surprised when we will see a major top for the broader equity markets later this year. Too many indications are pointing to a blow-off phase, but as you might know, half of the gains in a bull market are often
right at the end
being made in the last 10% of the time. So we could have a real blow-off in which we'll see a doubling of stock markets in, let's say, 4, 5, 6 months. Wow. And I've experienced the bull market in the late 1990s, and actually was for me a reason to start investing in gold and silver at that time. And one thing I learned about bull markets and bear markets, they always will take a little longer than you expect. And the madness first will get a little more extreme. But we're closer to the top than the bottom, of course. And it will be very interesting to see how other markets like crypto and precious metals will react when the stress within these equity markets will increase. And actually here in the fund, as we speak, we're buying hedges on our position by buying volatility ETFs, which are ultra cheap now. And we've seen that last year, you know, they can go up 10x when there's a new crisis.
Interesting. Well, what's your time frame? 6 months?
Well, we buy the volatility ETFs now because if I look at patterns now and I compare the patterns to, let's say, February, March last year or other parts in the cycle, I wouldn't be surprised that we have a real pickup on volatility in a few weeks and sure in a few months, but it could happen any day. And we saw the start of panic last week. It subsided after 2 days, but look at what the fix did.
So I'm trying to nail down your trading here. Are you long or short the broader equities with that volatility call?
Well, we run the Commodity Discovery Fund, which is a different beast because it's a resource fund, which is heavily exposed to precious metals. Let's say 60–70%. So, of course, we watch the broader equity markets because if there's a market crash or huge volatility, our positions tend to go down as well for a short period of time. In March 2020, our markets went down 40% over a short time frame, but then really recovered very, very quickly, what you often see after a major crash. And since our fund has really grown from, let's say, 50 million last year to almost 200 million now, we put a lot of energy in making sure we don't have the risk of going down 30, 40, or 50% within a short time frame. And because we are a long-only fund, we're not a real hedge fund, so we're typically long our discoveries, which are the best discoveries worldwide in copper, nickel, zinc, gold, and silver. We have only limited instruments to hedge these positions. And one of those instruments is the volatility ETFs, which are great to hedge your position.
Yeah, no, that makes a lot of sense. So are you keeping a lot of dry powder in the event that happens so you can buy up a lot more commodities, precious metals and things?
Actually, during these days, this week, we are taking quite some profit. We're growing our cash levels. Normally, we have cash levels near zero. We're growing our cash levels a bit now. And the profits we take, we turn these profits into investments like the volatility plays. And we have some ETFs like the DUST, which go short, actually have short exposure on the precious metals markets. So we're building. Don't get me wrong, we're not hedging our full portfolio now, but we're starting to hedge, let's say, first 5% or 10% of our exposure.
Makes a lot of sense.
You mentioned on Twitter, you've been very much of a proponent of PSLV, and you have indicated you wanted to make it one of your largest positions in your Commodity Discovery Fund. Can you share, is it yet your largest position or in the top three?
It's in the top 5. I think it's the fourth largest position. And actually, it's a hedge in itself for us. Because if the equity markets will go down, silver might go down a bit, but it never will go down 70–80%, especially not in these markets with the current physical demand we see out there. So the PSLV is a way to make our portfolio less volatile. And that's why we don't have any problem to add to our position in PSLV. And I think the risk reward situation is quite outstanding, because silver, as you all know, that's why you started your own group. Silver can go up 5x, 3x, 5x, 10x. So the risk reward ratio is wonderful. You have unlimited upside, and the downside, well, silver might go down on a short-term basis 30%, but I don't think silver will go back to $10 again. And when it does, you should buy the dip.
Buy the dip. Willem, thank you very much for giving us your time. We know you're very busy, and we appreciate you sharing your thoughts with Wall Street Silver. And we'd love to do it again in a few months when as markets develop.
It's for the good cause. Huh?
Have a good day, sir.
Buy some silver.